When someone applies for a mortgage and owns rental properties, the lender must calculate how much of that rental income can be used to help them qualify for the loan. The amount of rental income that can be considered depends on several factors, including whether the borrower has a current housing expense, how long they've been receiving rental income, and whether the property is the one they're buying, called the subject property, or another one they already own, a non-subject property. Here's how it breaks down in simpler terms. 1. Borrower has a housing expense and experience with rental income. If the borrower already owns a home and is paying for it, and has been receiving rental income for at least 1 year, or has managed property for at least 1 year, any rental income from the property, whether it's the one being financed or another one, can be fully used to help qualify for the loan. 2. Borrower has no current housing expense but has rental income experience. If the borrower doesn't currently pay for housing but has received rental income from a property for at least 1 year, only rental income from a non-subject property, a property that's not the one being financed, that has been rented for at least a year, can be used for loan qualifying. The rental property must have been in service for at least 12 months. 3. Borrower has a housing expense but less than 1 year of rental income experience. If the borrower owns a home and pays for it, but has less than 1 year of rental income or management experience. For a subject property that will be a primary residence, like a duplex where they live in one unit and rent the other, the rental income can only be added to the borrower's income up to the amount of the housing cost. PITIA, principal, interest, taxes, insurance, and association fees. For a subject investment property, the rental income can only be used to cover the property's expenses, but not to show extra income. For a non-subject property newly rented or in service for less than a year, same rules as above, can only use rental income to offset expenses, no extra income counted. 4. Borrower has no housing expense and no rental experience. If the borrower doesn't pay for housing and has no history of rental income from the subject property cannot be used. Rental income from a new non-subject property also cannot be used. Summary: lenders want to make sure that rental income is reliable before counting it toward a loan application. If the borrower has a proven track record with rental income or property management and is already paying for housing, they can usually count more of the rental income. But if they're new to renting out properties or don't have a current housing cost, the lender is much more cautious and allows less or none of the rental income to be used when qualifying.